At a time when most of the experts are of the view that for Indian markets, new bull market has started. We are starting a new segment on First Trades called A Stock Pickers. On a regular basis now, we will be getting you stock ideas from some of the key market veterans. And today we kickstart that segment with Kedia, Managing Director of Kedia Securities. Vijay has been on ET now before a couple of times. He's got over 30 years of market experience and has identified not one but half a dozen multi-bagger ideas in last 20 years. Morning Vijay, thank you for joining us. Vijay, first let's start with your market outlook. At these levels, are you a bull or are you a bear?
There are four types of expectation in the market. One is unexpected unexpectations, which we saw last year when stock prices had fallen 80% from their peak. Second phase is expected unexpectations, which we are going through now. We know the numbers are bad, but stock prices are not falling because we are buying on some expectations. That is a temporary phenomena. Third phase will come, which is expected expectations, when we can predict the price. And fourth and the final phase is when again you are unexpecting something unexpected. That is called unexpected unexpectations. At that time heart will rule over your mind. So now we are in the second phase or first phase of the bull market.
Right. And what is your number one investment idea?
I personally, I am not an advisor, let me tell you, but I can tell you what I have done in the past. Last month, I was in cash and I deployed my cash in few scripts. One of them is TRF, Tata Robbins Fraser, earlier name. So that's my all-time favorite also. I have invested in that company with the simple matter that in India we are at the bottom of the cycle so far infrastructure is concerned. I think things are going to improve from here, and this company, which has a very tiny capital of 11 crores, having a turnover of around 1000 crore now. Current this year could be 1100 something, and but bottom line is very bad because of the reason everybody knows. I expect this company to get very big orders, huge orders in times to come from NTPC and steel plants, which are pending for last 1.5 years. So I am very bullish on this stock, and I expect this company to double its turnover in 2 years from now, from 1100 to 2500 by 13-14. And even a reasonable EBITDA margin of around 10%, say suppose, or 9, even 8% will give it a profit of 200 crores on a capital of 11 crores. So I am bullish on TRF.
So Vijay, what is your price target for TRF?
So for price target is concerned, I don't make any price target about my stocks. I flow with the time, flow with the market, flow with the bull market. So, but I assume it's a multi-bagger.
So are you looking to buy TRF at the current levels of 343?
You see, I had bought TRF at 222 rupees, 25 rupees. That was, I was lucky, in fact, let me tell you. So at this price, at 350, I am not a buyer, but I may consider buying after seeing the fourth quarter result. So currently, I am not a buyer in TRF.
Vijay, one down, what is the second mid-cap idea for the year 2012 and beyond?
Second idea, I like a company named HSIL, Hindustan Sanitary Wares Limited. Price is 150 now, okay. And as we know, this is the manufacturer of sanitary ware by the name Hindware, that's the brand name. And this is a unique company having a 40% market shares in organized sector. And this company has grown 5 times in last 5 years. And bottom line of this company has grown 20 times in last 10 years. I am expecting, and this is in public domain also, management has also spoken about it, that this company is going to grow 5 times in next 5 years. So Nikunj, personally, I like any company, any best managed company. If top line is good, it certainly lures me. If the management is not good, then what lures me is sideline. So I like HSIL for the simple reason the management is very good, very aggressive, and they have earmarked a very robust growth in times to come.
But, you know, Vijay, my follow-up question is that HSIL is a commodity company. They have operating profit margins of about 15% and they're growing at about 20%. So why do you think HSIL, which is a commodity company, couldn't be a multi-bagger? Because commodity companies never become multi-baggers.
They have entered into a new business, that is glass container business also, and collective sales they are predicting 5,000 crores by 2015-16. If I go by your statistics, then 16% margin results into 800 crores of operating profit. And if 8% net profit margin which we are having now, then it comes to somewhere around 400 crores. So that comes to 70-75 rupees EPS. And the stock price is still available at 150 rupees. So that's a P ratio of 2. It's certainly a cheap stock, especially from the company which is India #1 brand. So that certainly attracts me.